Well, good afternoon. My name is Paul Bodicher. I'm the Director of Media Relations here at the Bank of Canada, and I'll be moderating today's press conference. Deputy Governor Toni Gravelle will be pleased to take questions for about 20 minutes. Before we get to those questions, let me quickly cover off some housekeeping notes. First, let me remind people to please mute their line if they're not asking a question. You can do so by pressing *6 and unmute when the time comes by pressing *6 again. Pour mettre votre ligne en mode discrétion, appuyez sur l'étoile 6. Pour l'enlever, faites étoile 6 encore une fois. We're going to do one question per reporter in this first round, and we'll see if there's time for a second round after that. If I don't do so, please state your name and affiliation. Avant de poser une question, veuillez vous identifier. Et comme toujours, libre à vous de poser vos questions dans la langue officielle de votre choix. So we'll get going with questions now, and we're going to start with Shelley Hagan from Bloomberg News.
Thank you, Deputy Governor, for taking questions. I wanted to ask, in your speech, you had mentioned a lot of uncertainty around the economy's productive capacity due to supply chain disruptions. So in taking that into consideration, is it within the realm of possibility that the output gap could be closed within the next month?
So, as I mentioned in the speech as well, we're a very data-dependent institution. So we're always assessing ongoing data, and most of my speech was focused on how we assess risk to the outlook that we itemize in the NPR. As I went through in my speech, we look at a variety of factors to understand how these risks might or might not be materializing. And as a result, one of the risks to the outlook that I focused on was risk related to supply chain disruptions and cost pressures that businesses face. That is a very data-intensive process. We gather data from a variety of, we use a variety of indicators related to trying to assess that. I mentioned the Business Outlook Survey in the speech. And as a result, we accumulate data over time. And at this, as I mentioned in the speech, we will be doing a full assessment of those risks to the outlook in our January update to our forecast. As is, I mentioned a couple offsetting factors to economic activity, the floods in BC and Omicron, which we just hit sort of our kind of our radar, and both the public health officials and economic prognosticators are trying to understand what that means for the, they are trying to understand what it means for health, and we're trying to understand what it means for the economy, and we'll have a better handle of that, hopefully a much better handle of that around our January round of forecasting.
Thank you. We're going to go now to Julie Gordon from Reuters, please.
Hi, Deputy Governor. Thanks for taking our questions. You talked a lot about inflation and just how much of a risk that was. I guess I'm wondering, does the Bank of Canada agree with the U.S. Federal Reserve assessment that the factors driving inflation should no longer be characterized as transitory?
Well, as I said in the speech, our assessment currently is that we still view inflation as going back towards the 2% target in the second half of 2022. A lot of the reasons for that are related that we believe, as we outlined in the NPR and as I mentioned in the speech, is that the global supply chain stresses and disruptions will work their way out of the system. I mentioned businesses will invest in higher productive capacity. Logistic firms will add capacity as well. And we believe, and we've seen that in Q3 data, that consumers will return to their more normal normal spending patterns and shift from excess purchases of goods, if you will, and go back to normal pattern of having a fairly large share of their spending in services. All those things imply that the global supply chain factors will unwind over time, and our best assessment as is that we see those dissipating over 2022.
Okay, we're going to go to Jordan Press from the Canadian Press, please.
Hi, good afternoon. My question kind of is following up on that because you've talked about how inflation obviously is supposed to come back to target in the second half of next year, and you're now monitoring expectations. And I'm wondering, though, if you have a concern that essentially you're going to have more trouble managing those expectations because as the longer that inflation stays elevated, the less likely it is that maybe the public is listening to the Bank of Canada saying, don't worry, this is transitory. I'm wondering, how do you manage expectations in that environment?
I'll answer that in maybe two ways. One is more that on the ground, we're not seeing shifts in long-term expectations and various measures that we use. And as well, one of the other factors that you didn't mention was we're not seeing sharp wage increases above sort of historical norms. So in the current environment, it doesn't seem to be an issue, even though we've had higher inflation for a little while, at least in the last part of the year. But as I mentioned in the speech, we have heightened concern that any crystallization or materialization of those upside risks that we have been monitoring, including the supply chain risk, and there's a few others, that will extend the period of high inflation. And because it's already above our 1% to 3% range, we're much more concerned. We have a monetary policy framework where we are mandated to target 2% inflation range. We have the tools to get us there. If our assessment come January or in the future, after assessing the data, implies that these risks are materialized, these upside risks are materializing, and we get uncomfortable about how long inflation will be above our inflation control range. We have been adjusting monetary policy as a result, as the economy recovered more robustly. Last month, we in October, we ended our quantitative easing program, and we also adjusted the guidance related to forward guidance. So we are, in some sense, reacting to what we're seeing, and we'll continue to react to what we're seeing. The other, I guess, I kind of slipped in the answer to the second part, is that our concerns are heightened on the upside risk much more than normally. Normally we have kind of this balanced view of concern about high upside risk and downside risk, but we're much more putting a lot more effort and likely to react a little bit more readily to the upside risk, given it's already above our inflation control range.
Okay, we're going to go to Mark Rendell of the Globe and Mail in just a moment. I have three other people I know on the call after that. If there are any other reporters who have joined the call and who wish to ask a question, just let us know, please, by sending a quick email to communications with an S at bankofcanada.ca so we can put you in the queue. All right, we'll go to Mark Rendell from the Globe now, please.
Thanks so much. Hi, Deputy Governor. Can you hear me?
Yep.
Perfect. I'm hoping to ask you about the upcoming mandate renewal. There's been a lot more use of terms like full employment and a lot more talk about employment I've heard from the bank over the last year or so. I'm wondering, are you expecting that to show up in the new mandate when it is revealed? And has there been any, disagreement between the bank and Department of Finance over what the mandate is going to look like?
I won't speak to the mandate question at all. I just wanted to highlight that in terms of our labor market discussions, it's not really new that we talk about labor markets, really. I think the new part in some respects is that we're looking at a vast array of indicators, given that this pre-pandemic is quite unique and has generated a kind of a complex recovery, one that we've never seen before, in part due to what I mentioned in the speech, this closing and reopening of the economy. So we've been looking at a variety of indicators, and given the labor market has already embedded a variety of indicators, we kind of beefed up our kind of sort of collection of that and aggregation of that and trying to understand, in an effort to better understand how the economy is evolving. We've put a lot more effort in trying to understand how the labor market's evolving to give us a better sense of how the excess capacity in the economy is evolving, really. But on the IT renewal, I won't speak to that.
Okay, let's now turn to Kim McCrail from the Wall Street Journal, please.
Hi, thanks for taking the question. Deputy Governor, you said in your speech today that the risk of longer lasting, the potential upside risk in terms of longer lasting inflation and the supply issues that are feeding into that were prominent in the discussions leading up to the announcement yesterday. Can you just describe what's changed in terms of how prominent a role this is playing in governing council discussions this time around versus in October before the NPR?
Well, I think it was very prominent in our October discussions as well. Just to be clear, it is one of the reasons why when we say the economic recovery is uneven, and there's a wide...
The host left the meeting. This meeting will end in 5 minutes.
I don't know if that was you, Kim, but...
I don't think so.
Okay. It's kind of a part and parcel of our puzzle. And actually, as I described in the speech, we thought it was a small part of the economic recovery in terms of a puzzle. And as the year progressed, especially after April and over the summer, we started getting all these kind of different signals about how supply constraints were evolving and being much more bigger puzzle. And the reason why it's pretty prominent in our discussions, both in October and this past decision in December, is that it is an area, as I mentioned in the speech, where our economic models tend to have a bit more trouble handling them in terms of capturing. So at the end of the day, because the models are a bit more having trouble capturing, we spend both our staff, who do a great job, have put extra effort in trying to understand how these supply constraints affect both economic growth and inflation. And then we ourselves are driven to also do that, layering on top of what our staff analysis is to bring our own sort of deliberations to bear on that. So it's just because it's the center of, it's because the models are kind of having trouble capturing that, and our staff are providing us more information outside of that kind of modeling space for us to understand it. And then on top of that, we have to discuss what the staff's providing and what we are thinking about that and all that. So it's really kind of why it's prominent. And it's also the dynamic that was that seems to be prominent in terms of inflation dynamics, right? So in our NPR in October, we said there's a chart 9, which is kind of the key chart when we talk about inflation, and we break it up to 3 components that are driving inflation there. One's energy, one's the bounce back, and this hard to distance services consumption, and then there's this supply factor, which if you look at the chart, it's a mighty big part of the inflation process. So our job is to monitor and assess where inflation's growing, and that's why we're spending a lot of time on supply disruptions.
Okay, I can just assure you I haven't left the call. I'm still here, and I'm going to call on Greg Quinn from Market News next.
Hello. I wanted to ask about the core inflation indexes the bank uses. You know, I think early in the pandemic, the bank appeared to rely on the core inflation rate to suggest price gains were transitory. You know, and even looking today, the CPI common is 1.8. The other measures are 2.9 and 3.3%. Have those core measures not turned out to have done a very good job? Is there a way to go back to something that could be more effective at looking at core inflation?
No, well, we still mention them in our press release. They play a very important role. When we built them, they had sort of more congruency in terms of what they're applying for the economy and inflation. Again, because this is a very unique situation. The pandemic has created all these kind of interesting economic forces. The closing and the reopening of the economy has driven some very interesting dynamics. We are looking at a wider array of information, trying to understand what's happening to inflation, total inflation, as well as trying to understand what the core inflation measures, or the three core inflation measures are implying for the economy. But we haven't dropped them in any way, form. It's just that we need to sort of look under the hood a little bit more than we normally would have.
Okay, we're going to take one last question here from Dave Parkinson of the Globe and Mail, please. Go ahead. Dave, if you're there.
I need to unmute. There we go.
There it is.
I'm the idiot. I'm today's idiot. Finish off well. Tony, thanks very much. You talked earlier about the upside risks and more focus on the upside risk, maybe being more sensitive to the upside risks. I wonder if you can clarify, do we actually see the balance of risks at this point, or do you actually see the balance of risk at this point as being tilted to the upside, or is it just that you're more sensitive to the upside?
Yeah, I think in between our assessments, the NPR assessment, it's hard. Well, at the NPR assessments, we have these risks typically balanced. In between those assessments, there's an opportunity to look at if something looks like it's materializing. But in this case, if you look at our list of risks, there's one downside risk related to the pandemic, the COVID variants, that looks like it has materialized. So there's one downside risk that looks like it has materialized. If you read that risk, we talk about new variants and periods of time where the health authorities extend the period of distanciation. And then in terms of the other upside risks, it's not as clear what's happening. I think in terms of the supply pressures, the supply constraints, I don't think we have that much new, if anything. We're just seeing glimmers of, looks like some of them are being resolved. If you look at supply semiconductor chips for autos, it seems like it's ameliorating. So we don't really have a good handle if they're unbalanced at this time. But I can tell you that there is some upside risk. Looks like they're crystallizing maybe at the margin, but definitely there's also downside risk crystallizing. So I can't really put them in. Doesn't seem to be an unbalanced view right now.
Okay, that exhausts our. Sorry, Dave.
I was just going to.
Go ahead.
Yeah, I was just going to say, just for a clarification, that you are certainly more in terms of your sensitivity to risks. It's tilted that sensitivity is more to the upside.
Yeah, I mean, given that where we are in terms of inflation above the range, and we actually mentioned this in October as well, that we are watching in a sense, or putting a lot more analysis in a sense to make sure that we understand if a upside risk is materializing.
Okay, that exhausts our list of questioners, and we're now pretty much out of time. So at this point, I'll bring this press conference to a close and say thanks to Deputy Governor Gravelle, and thank you to everybody who's joined us and listening today. Have a good afternoon.